So what if there was a way to be able to use the money that's currently sitting in the equity of your home, but without having to go through all the traditional means like taking out a home equity line of credit or acquiring a second mortgage, often called a HELOC loan? And what if that way of getting access to this money didn't involve jumping through different hoops with the banks or even committing to untold months of recurring payments? Sounds pretty good, right? Well, that's what I thought when I first saw Point.com marketing through Facebook and blowing up my timeline. And guys, this is not in any way, shape, or form an affiliate or paid sponsorship of Point.com. This is just simply a curiosity about a company that's promising to offer all of that. Now, Point appears to be offering an entirely new and novel method to tap into the value of your home, as it already is. But there's a little twist here involved. What they get in return for giving you a lump sum payment is a share of the ownership of your house. Now, that might sound a little bit scary, but think about it this way. What Point is essentially doing is acting as a co-investor in your home. Instead of assigning an interest rate to a loan that they give you, they just write you a check for a fair value share of your house. That's it. But hold up. Why hasn't this been thought of before? I mean, why haven't the banks been offering to do this for the past 50 years? Those would be great questions. Those were questions that I had. And the answer to this is, thanks to the advent of the internet, financial transactions, security protocols, and contract automation have made the home buying experience as a whole much more efficient and streamlined in order to allow for third-party companies like Point to almost literally have their own seat at the closing table. Now, using a proprietary platform that coordinates different home buyers or refinanciers with investors, Point appears to offer real tangible value to both first-time home buyers as well as existing homeowners alike. So is working with a company like Point actually better than, say, going the traditional route of getting a HELOC or a second mortgage? Well, that really depends, and here's why. There can be a lot more required involved in getting approved for a HELOC or a second home loan than there is in dealing with Point. Keep in mind that Point is using their own money to purchase equity in your home, and this isn't much different than how a company might issue shares of a stock. Only in the case of Point, your house is the company and you really are the CEO. Also, second mortgages and home equity lines of credit are often administered by the same bank that provides the initial home loan or primary mortgage. So working with a single party to achieve your home equity goals might actually end up being simpler and more straightforward. After all, too many cooks can actually spoil the stew. Homeowners that are new or refinancers who might otherwise be turned down for a loan due to stringent requirements from banks might be able to use Point instead. Why? Because they're not technically giving you a loan. Point is a private company that ends up co-owning your home, even if their share of the home ends up being only 5 to 10% of the value. Point's entire value proposition revolves around growing with the homeowners. Because Point has a vested interest in the appreciation of your home, they're only going to be making any real money on the deal if the asset in question, your house, goes up in value over time. Now, that being said, Point.com isn't going to be a perfect fit for everybody. That is for certain. For some existing homeowners who have a large percentage of equity in their homes, like the house I just paid off last week, make sure you check out that video, say 80% equity or better, and who have excellent credit, giving them more leverage with lenders, the platform Point really loses a lot of its allure. After all, why would you give up partial ownership of your house if you know that you can pay off a home equity line of credit quickly using the techniques from this channel? And if that home equity line of credit or HELOC loan comes with a really reasonable low interest rate. Another kind of homeowner that might not be a good fit for Point is the profit-driven real estate speculator who's really thinking long-term about the growth of their investments. And by giving Point a chair at the closing table, so to speak, real estate investors are really willfully giving up a chunk of their future earnings. Remember, Point is betting that any property that they invest in will increase in value over time, and it puts them on the same footing as any investor involved in the deal. If that home ends up going up by, say, 3 times over 10 years, Point's gonna have made quite a pretty penny, and the initial real estate investor might end up kicking themselves for that. Now, Point addresses this concern by offering home buyers or refinancers a buyout option, and at any time along the way, the homeowner can actually choose to buy out points equity in the house. What's more is that there really isn't a penalty or fee for doing this. So that freedom on behalf of the buyers is of course attractive, especially if the value of the home starts to spike as a result of sharp economic upswings and the homeowner has the cash sitting around to be able to send a point and buy that share back. Now, at the very least, what Point and companies like them are offering is really a new way to think about the leverage of your equity, being able to take that money and put it to work for you. What has historically been fraught with paperwork, protracted approval processes or exorbitant fees, and sometimes years or even decades more realistically of payment commitments is now a lot easier. It's quicker, it's more buyer-centric really. But at its core, Point is really trying to be an easy button for getting cash out of your home. Now, to find out if it's a co-ownership arrangement like this is a good fit for you with a company like Point, there are others, just head over to their website, point.com. And I'm also curious, for those of you who have actually explored this possibility, what was your experience like? Did you decide to try out their services? Did you decide to hold off? If you could drop a comment below, we're really interested in hearing about people's feedback on this. I'm somewhat neutral on it right now. I'm very curious to learn more before I make a formal decision, but certainly if you have a lot of equity, you're going to be better off probably working with the banks, and that's obviously what we're aiming to achieve here, is to end up with a portfolio of free and clear assets. So guys, comment below, tell me what you think of this new wave of lending or new wave of accessing equity in your properties. Have you been getting blown up through your social platform on this? I'm sure just because I've mentioned point.com 400 times on this video that my timeline will be even more full of it. As always, be sure to like this video, subscribe to the channel, make sure you hit that bell so that you get any notification, get all the notifications of any videos that we upload throughout the week. We're uploading several times a week as we're screaming to 150,000 subscribers. We can't wait to get there. We have contests regularly running here on the channel as well. To make sure you're an active candidate for those contest winnings, you've got to be a subscriber and make sure you're active in the comment section too. So until we see you on the next video, make it a great day today and take care.